Welcome to part 2 of my video for today, Monday, the 5th of August. I'm looking at the dollar index chart. Now, this has been really difficult for a year and a half. We've been stuck in this erratic, random, sideways channel going nowhere. The moving averages started flatlining around a year ago, and they've converged, which is what normally happens when you get this kind of price action. So we now know almost for certain that the US economy is weakening. It's a question of how much is it weakening. I think we're heading for an unavoidable recession, but my opinion doesn't really matter. What the market thinks is what's important. And the market is certainly now believing that recession is on the cards, because before last week, when we got weak economic data, the stock markets would take that as a positive, because they would believe that that would force the Fed to cut rates. And that's what stock markets like. They like lower interest rates. The stock markets are now plunging, even with an interest rate cut almost guaranteed in September. So sentiment is definitely changing. The market believes that a recession is maybe even unavoidable. And that's why I think the dollar will continue to collapse, because we're going to need some significant interest rate cuts in order to correct that situation. So I think this is just the beginning of a move to the downside, but that's my fundamental reason. Chart-wise, there's nothing really telling me which way the dollar will go. So for me to be right and find a money-making opportunity on a weaker dollar, what I would need to see, for example, is the euro break above the resistance area around the mid-109 area. Then we'd have a breakout, and then that would be something that I could actually trade. But right now, we're holding below resistance around the 109.5 area. I don't see any opportunities in the Aussie dollar. That's just going nowhere. That's going sideways. New Zealand dollar as well. I'm just finding it confusing. If you've got some ideas on how to trade the New Zealand dollar or the Aussie dollar, please let me know. I'm lost. You've got to know when it's right to trade, and you've got to know when it's not right to trade. Okay, now I'm going to look at cable, and I'm going to show you this trend line going all the way back 10 years. It's really important. I thought we'd broken above it. I thought we'd beaten the fib levels around 129.26, 129.83. We had. We got to 130.44. This looked like a big swing trade opportunity, buying cable, buying the pound versus the dollar on the breakout of a 10-year trend line and long-term Fibonacci levels. Now, we have come back below the trend line. So right now, this is looking quite negative because we failed at those important levels. I suppose on the grand scale of things, when you go back to 2007, this is just a tiny blip above those Fibonacci levels and that trend line. Maybe that means there's further downside for the pound as we reject that resistance level. But that clearly is the area to watch. Around the 129.00, 129.50 area, that is the resistance to watch. Now, one currency that is weaker than the US dollar is the Canadian dollar. So we've got the US dollar pushing higher against the Canadian. We've broken above a trend line going back to October 22. So that's getting on for 2 years, that trend line. It's pretty important. We've broken above it with a very strong green candle. We retested it on Friday, and it now looks like we're holding above the trend line. So this could be a buy signal for the US versus the Canadian dollar. So that kind of goes against my theory that the US dollar will weaken as we face potential recession. But, charts don't lie. Yeah, we do have a breakout. So maybe the Canadian is going to be weaker than the US. The euro is certainly showing signs of strength against the Canadian dollar. We had a long consolidation phase for getting on for 2 years. We've now broken convincingly above it. It was a difficult breakout. We closed above it for a few days, back below the trend line, and then we pushed higher on Friday. So euro really is seeing some strength against Canadian dollar, and we're up again today. So if you want to try and jump on that trend, it might be worth it. Long consolidation, breakout to the upside. It looks like a swing trade opportunity to be long the euro versus the Canadian dollar. I'm also going to look at the euro versus the Aussie, and we have a breakout there as well. Euro looking pretty positive against some of these currencies. Again, we're reaching new highs for the breakout as I speak. So that might be something you want to jump on board. Pound versus the Aussie also showing some strength after breaking above a couple of trend lines here, holding this upward sloping trend line. So again, looks like the pound could be pushing higher against the Aussie, might be worth a long position. The pound has been in a bull trend against the New Zealand dollar as well. I was looking to buy if we come down to support around the 212 area. Looks like we've already reversed and the bulls are getting control of this market again. But just be aware that that is a good support level. Fibonacci, 38.2% fib, and the downward sloping trend line gives us a good support area there. Now, as I said earlier, the stock markets have started to react to the downside on weak economic data, which is something they were not doing until last week. Before last week, as soon as we saw a little bit of weakness in the economy, the stock markets would rally in expectations of the Federal Reserve bringing forward a rate cut or even increasing the amount of the rate cut. Well, we do have that now. We are talking about 0.5% rate cuts in September, or at least analysts believe that we need some dramatic rate cuts now. We have broken good support levels in the S&P, so we are building momentum to the downside. We held the 100-day moving average on Friday, the blue line, but we've broken below it this morning. I was short last week. I did quite well. I actually made about 45% profit on my small $10,000 account. I do what some other people do, actually. I've realized this through my YouTube channel. I trade my $10,000 account like a $50,000 account. I don't need to put $50,000 in there. I can just put $10,000 in there and trade larger size, but I'm prepared to take the losses because I know I'm treating it as a $50,000 account. So although it sounds like I made 45, 50% last week, I really only probably made 10% compared to the way I'm treating that account. Hope that makes sense. If you've got questions, put them in the comments box and I will answer them about that. But my key point is that the stock market is moving to the downside. I'm short again this morning on the break below the 100-day moving average. And we have an important breakaway gap because on Friday, the end of the week, we closed at 53.76. And this morning we opened at around 53.30. We actually opened below Friday's low and obviously significantly lower than Friday's close. That's a breakaway gap. That's very negative when the market's moving to the downside. We've opened below the 100-day moving average. I think we're going to see further losses. I wouldn't be at all surprised to see us heading for support at 5,200 in the E-mini S&P. Same thing for the Nasdaq. We've broken 10-month trend line, 100-day moving average. It really held quite well initially, as you can see. It was a good support level, a big bounce off there on Wednesday. The market then plunged on Thursday and Friday with weak economic data. We had the sell signal before the US unemployment number was released on Friday. So I was getting short. Maybe my subscribers were following me and also getting short. So we did manage to capitalize on that move. And again, a breakaway gap to the downside. We opened below Friday's low. This really does look negative for the Nasdaq. It looks like we're easily going to 18,000, probably even 17,950, 17,850. So we'll see what happens when we get there or whether it's worth trying a long position. Right now, for the beginning of the week, I'm expecting further losses for the US stock markets. Significant losses. Okay, I hope you found these two videos helpful. I really do value your feedback and your comments. If you want to sign up, get my full analysis in my private Telegram group here. As you can see, you get the full analysis for all the stock markets. You get the trade ideas sheet. If you want to join the free Telegram group, you can also click the link below. But if you sign up, you also get full analysis for oil, silver, and gold. There's a lot going on in there, and I talk about fundamentals and everything. So it's very educational, and you get to copy my trades as well. All right. Please leave your comments and please do like, share, and subscribe. I'll have another video out for you during the week.